Good day. Appreciate you stopping by for your appointment today. My name is the Black Dr. Phil. I'm a licensed financial representative, and I love to talk about investing. So if you like this style of content, please like, comment, and share. On today's video and in today's appointment, I want to discuss a little bit about gold and a little bit about conservative investing right now. So this kind of came up. I had a client call in this week who wanted to speak about gold. They had a little bit over 30,000 in his account, and he had been kind of watching the news and looking at different things, and had really wanted and really was excited about getting into gold. And so I kind of was trying to kind of get an idea of where his mindset was with it. He had been reading articles and different things, just trying to get an idea of where he could put his money for a short period of time, or even maybe a little longer, that was conservative, that he could kind of offset some of his losses that he had both last year and coming into this year, 2023. And so, as we continued talking, it became really apparent that he wanted to see a little bit of a larger return than maybe is really available. Gold is really kind of an interesting thing in the market, right? It's what backs a lot of money. It has been probably one of the world's natural resources for many, many years, obviously. And it has had its value kind of skyrocket as inflation has set in. And so what's going on is that you see a lot of people thinking, oh, I'm going to invest, thinking I'm going to make this large return. And that's just not true right now. What's going on right now is really the money market and the CD rates. When you're investing in gold right now, you're being a little bit more reactionary. What you're thinking of is thinking of really what happened prior to the pandemic, and of course during the early stages of the pandemic, when people were really investing in gold and were really seeing that return go up higher and higher and higher. Right now, if you're going to be really conservative, which is perfectly fine, it's certainly what you should be doing when the market is going like it's going. You should certainly be looking at the money market rates. You should be looking at CD rates, and you should be looking at some of the money market mutual fund rates. It's very easy right now to get a good 4% rate. I know what you might be thinking, 4%, that's not really anything. What are you talking about? But 4% can really help offset your losses and can really help you continue to grow at least some of your money while we're during this weird economic time, right? We keep hearing things about recession. Obviously, the numbers point that way, but then you've got all these jobs and people are getting 10 and 15, $20,000 raises. And so it's kind of just a weird time. So putting your money into a short term, or maybe a year, maybe 2 years if you think it's going to happen that long, it could be a good play. You know, you have to think about it in this sense that we don't have another presidential election for another year. Depending on how you feel like things are going in the political realm, it may be a situation where you want to invest a little bit longer just because you want to see how things play out, right? And so those products offer that. So I would say, hey, if you're looking to stay conservative right now, or at least a portion of your portfolio stay conservative, I would be looking at some of the money market mutual funds and some of the CDs. So, as always, in anything that I speak about, please speak with your financial representative, your financial advisor. Get an idea of what's suitable and best for you. I certainly appreciate you stopping by for your appointment today. Once again, I'm the Black Dr. Phil. And so I always leave you with this, man. God is still good, and still makes great movies. Michael B. Jordan is still the future. We're still in a pandemic, so please wash your hands and your feet. And when I'm speaking about money market mutual funds, I'm thinking of things like the JP Morgan, Fidelity, Invesco. Those are some of the big ones out there. Certainly, there are obviously others. When I'm thinking about CDs, I'm thinking about brokered CDs. I'm also thinking about at your local bank CDs, right? Your local, credit union, your local branch, they're probably running some pretty good specials right now, especially on that 1 year, 6 month, 9 months, even probably even a year and a half, even 2 years. I'm sure they're probably running some pretty good rates that can really help you right now. Also, don't forget when we're speaking about gold, we're looking at investing usually in an index fund of it. There are obviously firms that will allow you to hold it physically, like actual physical gold. But most people, of course, are investing in some sort of index fund, maybe even an ETF of it. There might even be mutual funds that are tracking it's in the market and things of that nature. It's still not a bad investment at all. I mean, you're looking at something that's conservative. You're looking at something that's going to kind of maintain its value for the most part. Like gold doesn't usually have large swings. I mean, you don't see like huge drops in its value. It's usually pretty steady there. And so that can also be good. You can also obviously look at some of the other commodities like silver and others. And as always, God is still good. Denzel still makes good movies. Michael B. Jordan is still the future. And I've got the Chiefs, the Eagles, the Bills, and the 49ers this weekend. Peace.